following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Ready to get started here. I know it's early in the States. I'm going to take a look at a couple of things on the radar screen here. Let's start out immediately with crude oil. And as we look at this, we've been, our own personal trading, been trying to look at this from by the support areas on crude oil and kind of staying away from the selling the resistance areas. As you remember before, we kind of reached some 53.67 targets, and we had come up in and kind of rattled around, gotten above that unfair low at 48, 49 neighborhood, that DMZ. We were looking at some dailies and weeklies combined. But let's just kind of step back for a second. We didn't really talk about this the other day. We've kind of got an inside profile here, kind of pinched in. And this thing's, I don't know if you remember, and I'd like to pull up a continuous contract of crude oil really quick. Let's just kind of go back into the continuous world here. This is our weekly. And for a long time, this is kind of on a macro scale here, but for a long time, we had kind of gone into lower highs, higher lows. This is a weekly chart. This is going back into 2011 when we started this cycle, but lower highs, higher lows, lower highs, higher lows. And then we had that breakout, and that breakout really confirmed itself. If you want to focus in on this a little bit, get out your glasses, that breakout above weekly highs coincided with this kind of compression that was going on in general. And that gave the really good green light to kind of get long for a while up into that 110, 111. I think we went up to the 113, if I remember. That was a great $10 move based on the same kind of compression factor. Then we had the real sell-off that happened. So, using these profiles the way I look at them, it just kind of keeps me out of trouble, regulates the trade a little bit. But what I want to do now, after seeing that, is go back down into the May contract here. Now, this isn't the same long-term compression factor that we just looked at, but I just wanted to kind of point out that we've got a profile that's kind of within a previous profile, and that means that we could have some kind of breakout action one way or the other just based on that alone. And we have, obviously, if you've been watching the show, been talking about staying away from the short side on crude oil, as we stated before, and we caught some good moves up. We kind of reached that 53.67 target on the weeklies, but look what's happening now. We're kind of compressing up again into the daily unfair highs. We talked about not, just staying away from this, but if we get a breakout 52.71, get a close above 53.67, I actually think we could move up into the $60 range. And I know that sounds crazy with the bearish reports out there and stockpiles, all-time highs, blah, blah, blah. I mean, with the dollar climbing and all that bearish fundamental news, you got to love the action on crude oil right now. I mean, this is almost show the hand, green light, put the stops in, and see how bad people can get squeezed by listening to the tube. We're going to move on to something that was a little disturbing to me yesterday. XLF had a little bit of a moonshot here for this particular product, and we talked about leverage against 24.28 combined with the 24.47. It got almost into that 24.47 area, but we're still sitting in the DMZ. And I told you my long-term stops are above 24.50. Still trying to hang in there with this. We've got some financials that are coming out as far as the earnings season. If you don't know, I don't know if they have the earnings reports on the TFNN website. I've never seen them, but you can get them pretty much anywhere. Hold on just a second. So as you look at these, we've got the JP Morgans, the Wells Fargos, the, quite a few others, Eaton Finance. So as we look at these, I'm still looking at above 24.50 as my stops on the short side on the XLF. A little disturbing that it kind of got back into the daily profile yesterday, but I'm not too concerned about it from the short side. Let's take a look at a couple other things that we want to kind of review before we get going here for the rest of the day. Gold, man, getting hit a little bit here. And let's look at the dollar situation, just so you know the landscape there. It's a kind of rally. Obviously, on a long-term basis, we haven't reached those weekly targets. Talked about not shorting against those weekly targets, 178.79. We're above with daily profiles. This support situation, 98.75, I'm still going to stand by. And as we look at gold, as this dollar seemingly continues to get strong and the euro continues to get weak, we're going to look at the June contract of gold, and we talked about some waiting patiently points here until we got back down into 1182, and our low today looks like 1185, 1186, somewhere around there. So that's kind of the catch it area. We talked about not shorting this, and we talked about waiting for some inflection points to be reached. Well, they might be reached today, and that might be we could have some follow through. We could move lower, but this is where you pick a battle, in my opinion. You got a decent support area down there, and you've also got, within our scanner, you also just get those pictures painted directly for you. Pull their scanner up, keep it on the sidelines here, but gold's kind of pre-market continuing to go lower. I wouldn't do anything with it at all from the long side until we got to 1182, 1183. Gold usually overshoots profiles in general. It's never to the tick, as you can see, a little bit of noise factors there. So be prepared to take a little bit of heat if you're going to play that game. All right, well, as we go through the usual suspects, we're going to just briefly touch on this Shanghai situation again. Not backing off. As Joey talked about, when these things start moving, it's almost like a shift in a country's currency status. I mean, these things just continue to go over here in Asia when they happen. And it's maybe a little bit of a replay. The Hang Seng backed off a little bit today. I'm going to pull that up. If you call that a little bit. So, and this daily is not reflecting that. So we're going to have to not pay attention to that. We're trading real time about 27,560. And there we go. Finally updated. Why did it do that? Amazing. Anyway, so the support areas on this, we're probably going to get a new profile appearing on the Hang Seng. I wouldn't pay attention too much right now to that 25,672. I don't see a retracement coming back to that, but as we hopefully we'll see some new daily profiles that'll give you some new leverage points on the Hang Seng. And remember, I don't think you try to be a hero and short the Shanghai or the Hang Seng. We've got some serious components, confluence with what's going on in the index value itself. And as Joey had stated, this is kind of the buy the dip situation on the Shanghai and the Hang Seng. Make sure you put your stops in, though. Let's take a look at the euro really quick. Not a lot new to talk about there. This is probably going to par. Anything can get some people out of the market, though, so be prepared. Put your stops in. Don't be the guy who lets 600 pips go in his face up back to 111 and suffer all that when you could have stopped yourself out and re-entered. I mean, I'm not saying that's going to happen, but just keep that in mind that these things can do anything. Remember to put your stops in. Before we get a break, we got to cover some of the more usual suspects of treasuries. It's just par for the course. Market comes off a blip, and these things just kind of move up. That's what's going on with the 10-year. Here's the 30-year. We talked about where that was down in the 162.22, 162.08 DMZ. Yesterday, look what's happened. We just kind of bounced right off of there. We probably will see targets of 165 and even higher on this. Our breadth numbers on our S&Ps are kind of flipping around here. I don't like that. We talked about staying away from going long the S&Ps recently. The edge isn't there, in my opinion. And as a trader, you always try to find out, where's my risk? I mean, I think the risk is going long the S&Ps right now. So missed a little bit of move up. We've talked about that outside the 270 breakout area. So what? Was that a risky trade? Probably. I'm not a big fan of hanging on the longs right now. And I don't normally say that. I mean, especially when we're trading above profiles on the weekly and daily. But I just see the internals having some issues right now. And when that rubber band gets a little far stretched out and the leaders are carrying the whole backpack, it pulls back. We do have some corrections when those things get a little bit out of whack. That's not happened yet, but it's starting to look a little sketchy. Taking a look at the DAX. Talked about that new weekly profile appearing, 12,243. That's going to kind of be the support areas on that. Here's our 240. Still not convinced this is in any means going to come down, and we've talked till we're blue in the face about not shorting this thing. I still think it's not a short at the very least. Silver, got to cover this one. Yeah, we talked about the 660 area, got to be breached, got to be closed above again to get long. Keeps drifting lower. Next stop down, 1559. So you're range bound right now. A chance to buy at 1559 and 1660 is going to be the target on that if you're going to play the long side. That's an intermediate to long-term type trade. I know a lot of you guys out there are trading a little bit shorter term. I'm just giving you the broad kind of scope of things here. Here's the soybean trade in the November beans. Edging back up a little bit. We talked about leveraging off the 942.5 area. That's still, in my opinion, with a little bit of noise factored in, where you need to put your stops around. Soybeans, in my opinion, are going to head lower, but there's no sense in hanging on to things that are showing you that they're not supposed to be hung on to, put it that way. Guys, when we come back from this first break, we're going to get into some of the earnings stocks. And we're going to have a lot of bank stocks out there. So we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm showing our Scanner Plus right now. It's a little bit easier to do things outside the web environment. I'll say that. I want to try to talk to Tommy and Tom today about getting you guys this. It's just quick as lightning. I don't know. I was looking for a word to use other than lightning, but it's pretty quick. Pops up some decent charts, gives you a little bit more information, allows you to sort on different time frames combinations, basically. So if I want to see above the box and daily sitting at the bottom on a major pullback, it just kind of allows me to filter through multiple time frames really quick. And this thing is lightning. Did I say that? I think I did. Only match results I've got loaded here. I can save situations a lot easier. Load settings, defaults, manage instruments, pretty easy actually. So as I come in here and choose them, I want to add an instrument, manage them, go in here. Well, I don't have any custom loaded here. Let me do something like that. Chung Kong. Good old Chung Kong out of Hong Kong. That's where the Bloomberg office is in the Chung Kong building. So I want to add that. Then I want to come in here and manage the instruments. Clear that, blah, blah, blah. Okay, so here we go. All right, so that sort's not valid. I didn't mean to do that. So here we go. So another thing in here that we've added, which we talked about a little bit this week, was I go in here to Apple. A lot of people, you know, I'd say there's a pretty good dissertation that you got to kind of go through when it comes to figuring out, you know, how these can and possibly may add value to what you're doing. These scanner results, and you know, why are you filtering down and finding certain situations? You know, I've used our information for years since I was with Pete Stottlemyre up in the Board of Trade, and this is kind of not the last stages, but it's kind of an evolution that's happened. And, I'm extremely comfortable with it. But a lot of people, when they look at this, we thought a kind of a little bit of a paragraph would help. And I think it's very cool. It's almost like a real-time research paper that changes and just kind of guides you through with a little bit of English here on what's going on with Apple. So as you can see, Apple is, all grays were within the profiles on each time frame. Let's take a look at something like Accenture ACN. So as this comes out, I don't know if you guys can see this in the den. I hope you can. Since we've got that orange cell, and that means that we've got a weekly new box possibly attempting to appear, caution alongs. Targets may have been met in the interim, and trading range could be developing in the uptrend. New supply is attempting to appear above. This condition stays in force until Friday's close. New support resistance levels coupled with blah, 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 blah. And it gives you some decent information and some very pinpoint accurate information. So as you're looking at ACN, you see the next cell's 12. Trend is favorable to longs, has been enforced for 12 days with primary and immediate term support at 90, blah, 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 blah. So we go on and go on and go on. I'd love to get this out. It's finished. I think it's cool. I think it's very useful. And I hope Tom and Tommy want to release this thing. That's the drill there. Let me make sure my den camera is still working right. Okay. All right. So promised you we're going to look at some stocks in the earnings scene. Nice comment, RJ. Thank you. I'm feeling proud. Wells Fargo. All right, obviously a little bit of a movement pre-market here. This is the bank stock that I have the least confidence in. I think Tom lectured us before we started this endeavor with him to not slam things too hard. The Wells Fargo is the worst customer service. If you guys have ever had an account, it is unbelievable. Unbelievable. But anyway, throwing that aside, they're concerned with making money and not really making me happy. So as we look at Wells Fargo, where's the edge in trading here? 54.73. I still like the XLF as a short, right in the middle of a trading range on the long term. Taking a little bit of risk on here, but I think we can still put stops above the 55 area and try to let this thing fall apart a little bit. Where's it headed? I think ultimately down into 51.45. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's locked up. Guys, thanks for coming back. We're just restarting e-signal here. A little bit of a glitch here. Hang in there. Let me get this back up so we can get some charts going. All right. So, we're going to look at, while our charts are popping back up, we're going to take a look at BUD in just a little bit. And we're back up. That was quick. How'd that happen, Michael? We must be paying our bill. Here we go. Let's take a look at Budweiser. This is something I used to day trade this, believe it or not. It's a $120 stock, $127 stock. And here's the daily situation. Here's the long-term weekly. Let's just kind of back up and see where this thing's come from. All right, so we see how that's going long term. 127.09 obviously hit that, kind of backed off, but I'm looking at this 124.50 still is a buy point here. We kind of rattled around, got down, we got back above into the fair auction, came back down. This is where I'm putting my stops below 124.50 on Budweiser. Excuse me. And they're, amazingly, just got to tell you guys this, amazingly so, there's some unbelievably good beer in the Philippines. San Miguel carries the torch over here for sure. But they have, you might get a San Miguel beer in the States, and there's probably one style, but they have like 10 different styles of beer over here, European beer, a light beer, they have a dark beer, but it's all done very, very well. And the quality is incredible. And actually put a huge San Miguel brewery on this particular island of Negros. It's got Negros Occidental, Negros Oriental, the two provinces here, and the water coming out of the mountains here is so good, and coming out of that somewhat limestone type environment that it's just water's the key to making good beer. So just wanted a little bit of a locale type piece here. We're also going to take a look at JP Morgan. Had some news out on this. 7 a.m. this morning, this came out, and this is obviously within the XLF. A little bit of a breakout here. I wasn't expecting this. 61.78 unfair highs. And we got some decent retail sales numbers out right now, but here's the weekly situation. 60.72 now has breached to 61.78, so we're kind of getting clean and clear of all the congestion. Don't like this as a short right now. This is kind of broken through to some degree, and pre-market we're sitting at 62.73, so we're a little bit farther above on the daily than we just showed right then. And right now this is kind of okay to be long, not okay to be short, even though the XLF I'm still bearish on. This is not one of the weaker stocks in that group, put it that way. So that's the way I'm looking at that component of the XLF. Let's look at WAFD. This is another financial, Washington Federal. Believe it or not, I had some emails about this. This is probably like watching paint dry as far as the action goes, but I'm just going to go ahead and state it. Below 2143, stops below. Not really looking that heavy, but not really directional. Not really directional at all, because this is our weekly situation. And what would I do with it? For long-term investors, that's definitely the support area, but I'm looking for breakdowns below 2143 for me to short this thing based on my genuine feelings of the XLF in general. All right, let's pull up a couple others here. Good old J&J. Used to hate this specialist. Before the market opens, I'm assuming that the news has come out on this. We kind of churning here. 101.25 is my last price on this. That's not reflected in our daily graphs here. This has been a stock that has really been underperforming without question. You guys know that. 99.02. If you're a long-term investor, that's where you're going to have to say uncle. 99.02, and that coincides with this 99.11 down here. So guys who have this in their portfolio, I mean, this has kind of been the way it's been acting lately since first of the year, end of last year. If we get back down below 99.11, 99.02, I think you're going to just have to put all the hope away for this right now and just try to look at it later. Let some new profiles appear. Let's take a look at Intel. This is after the market today. This is not obviously in the XLF. Jay, I just read your comment, white lining in the mountains, North Carolina. You know what? I had talking about Budweiser as our reason why we're talking about alcohol. I had a really good idea that somebody actually eventually capitalized on. There's a North Carolina, by the way, is they raise 37% of the nation's sweet potatoes back home, and if you're in the eastern part of the state, they're basically as cheap as dirt. I mean, you can walk around in any field in the summertime and get all the free sweet potatoes you want, because some of them don't fit the bill for the sizing and all that. I mean, it's just an incredible amount there. So there's enough waste there when it comes to sweet potatoes to actually the guys at the elevator, they bring dump truck loads in of sweet potatoes that don't size right, and they feed them to the hogs. They do this, they do that, whatever. I mean, it's just they're everywhere. So with that in mind, there's a company down there that eventually, I had this idea. I'm not saying they stole it, but it's eventually happened. It's called Covington Vodka. They make sweet potato vodka, and they actually had NC State come in, do the research for free because it's a North Carolina product. They kind of took over the ABC stores. North Carolina sells alcohol in state-run facilities only. You can't. There's no so-called liquor stores there, and just got a tax-free environment on it, and are just killing it right now. So anyway, let's go back to Intel. All right. So as we look at this, 3202 and 3203, this is in the scanner, and it just plainly states it. All right. 3202, 3203, 3203 is the weekly for lows, and 3202 are the daily for highs. Now, this is at a very, very critical area, and we got an earnings announcement coming out, and I don't know what's going to happen here, but if this thing pops and breaks above this 3202, 3203 area, remembering that we're going to break stride on the technical kind of regulation trade on the dailies on down since like 38. There hadn't been a lot of happy people who've been holding this stock lately with the market going straight up. But if we break this area, you got to figure that this is going to probably start having some shorts run for cover. All right. Now, I don't know exactly what's going to happen, but in my opinion, and you won't hear me say this any other way, that I like to sit on the sidelines and not be a Kramer and tell people to get in or get long or get short of stock before announcements. I just personally feel that could end up very ugly. So if you wait patiently, wait for the yahoos to kind of rattle this around right after an announcement, Intel will eventually make a move in the direction it's going to make. And if that move is going to be above 3202, 3203, you're going to have some people that are going to have to be shifting gears on this stock. Otherwise, the pressure points down below are kind of no end in sight here. You've got that retracement back up into the weekly on for lows. It could fall apart pretty easily, at least below the $30 range. That's my take on Intel. So again, it's kind of a wait and see, but at least the scanner is going to give you the inflection points to pay attention to. All right, we're going to look at CSX. It's another one on the after the market closed today. I'm pretty sure it's after the market closes. That, yeah. Looks like it's, well, anyway, after the market closed today, here's the situation on CSX. This one, without question, 33.41 weekly on for lows, and then you've got 32.97. So you got a little DMZ there you got to get through. Again, waiting till the announcement, and this thing could go lower. I mean, this is not on sale. This is not the type of action you want to see in a relative strength type trading environment of your stock relative to the broad market. So this downside action here, it looks like we're trading 32.30 pre-market, even though this announcement's coming. I'm going to pull up NSC. And obviously these are freight line stocks. 99.05 pre-market. These guys missed their numbers. I didn't know. Let me look here. Let's check yesterday afternoon here. Huh. Okay. Wasn't on my list. Anyway, so this whole sector could come down. I mean, you got a sympathy trade going on with CSX and the NSC world. Where does this thing head? It could head down to the 101 area. This is our weekly situation on our profiles here, NSC. And that wouldn't be the biggest technical damage in the world, but with CSX looking heavy, NSC, I mean, this could be kind of a sector that's going to just suffer, put it that way. Let's go look at the yen really quick. I forgot to mention this earlier. I get a ton of emails about the yen. We talked about not shorting against weekly unfair highs. We reached a high this week of 120.85, and those unfair highs on the weeklies are 120.95. But so we're passing on the shorts, and we kind of breached back into the dailies. So this is kind of a, what do you do with it now? We talked about taking some weight off when we got to those weekly unfair highs, that neighborhood up there. And right now, what do you do? I don't think you have any leverage down here. I think you don't short it. This is our 240s on the yen. We kind of have breached there. So it's kind of a sit on your hands trade because I'm not a big fan of shorting this. Can this product go into the 140 range? I think so. I mean, last time the Japanese central bank decided that they wanted to devalue this thing, it went above 140. I mean, they're not finished with this. This is not exactly what they want. And I don't think it's very smart to try to short this. So we're looking for buying opportunities and support levels on the yen. Not a lot of change in the Aussie dollar. I fully believe this is kind of to be broken down here. We're just kind of doing a sympathy, a little bit of a preparation for things to come here. I'd love to see this thing consolidate around this level and then just do another flush. The country's got a ton of problems all of a sudden. Last time I was there, though, I think the Australian dollar was, I want to say it was like 109, 108 per US dollar. It completely was not a good place to be. Stuff down there was crazy expensive. But that was a couple of years ago. Anyway, let's take a look back at the bonds and the notes here after some retail sales numbers come out. Here's the note. Here's the 30-year. We're at unfair highs 165. We're trading 164.30 right now. This is real-time quotes. And what do you do with this? I don't think you short it. I mean, just not a big fan of shorting these treasuries. I don't think a lot of people out there are looking at these things going down anytime soon. Okay, we got a couple more stocks we're going to talk about after the break. And as we look at those, we're going to kind of reference the scanner. These are earnings-related stocks, and kind of see how the scanner is treating them as far as the grid of sales goes. So you guys hang in there, and we're going to be right back after this next break for our last 5 minutes segment.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're going to take a look at the scanner here as promised, and we're going to just, again, we're going to look at some things that are somewhat unsettling to be long. I'm going to leave that alone, and we're just going to only match results. Okay, cool. All right, so this is our Scanner Plus version, and really want you guys to look at this. Got some really cool paragraphs in here to kind of guide you through the minefield of trying to figure out how to use this thing possibly. Some of these, AMT paragraphs say long-term trend down could be good. Okay, so AMT all red. I mean, this can't look good if I pull it up. I don't even know if that's worth pulling up. Same thing for CHRW, CH Robinson Worldwide. This is an ugly situation here. We got a couple other ugly ones. Fastenal Company, FAST. Why did I say they're ugly? They're just, actually I missed that. I'm sorry. I meant to pull out Edison International. There's some crummy looking situations here. Another one, General Growth Properties, GGP. And I think Tom was actually referencing some of these property type related stocks. I haven't looked at those in a while, but that one's ugly. Hudson City Bank Corp, HCBK. You're looking for a bank stock that sucks, to put it mildly. Look at that one. That one might be better than short in the XLF. Mosaic Company, MOS, ugly. Potomac Electric Power Company, ugly. I'm reeling these off pretty quick because we've only got a couple minutes left. Here's UPS. This one seems to be on the ugly grid constantly. Whirlpool. These are a couple of stocks we talked about the other day. Walmart, Weyerhaeuser. So let's just reference the ones that are kind of the household names here. Let's just look at Walmart. This is one that's been in my doghouse. Here we go. Man, this looks sick. Oof. 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 And the cool thing is it gave you a really good leverage point around 83.50. Same turn the rents the same way type situation on some of these shorts. Let's take a look at. Somebody said Fast was up this morning because of earnings. Let's just take a look at this. Where are we at pre-market? 41.40. Okay, so even at 41.40, we're still not even getting back into the daily unfair lows. Obviously, this may be a shorting opportunity on a rally like this. We were sitting. Now, if you're using some of the things that we talk about all the time, this is Fast Company reaching some targets down below in the weeklies. Is it worth it holding on to this? Does this deserve to bounce? No, it probably doesn't. But we got an earnings announcement. We always talk about staying out of the market when those things happen. Let's look at UPS really quick. This is one we've just been, below 100. This has been pretty, it's like a turkey shoot. This thing could go lower, folks. We're trading 96.15 pre-market. Okay. Let's take a look at one more before we go to break. Whirlpool, WHR. Actually, we got to end the show here, so we're going to stop there. And guys, have a good day trading. Steve Rhodes is next. Hope you've enjoyed this. Talking to Tom and Tommy about the Scanner Plus today. I want to get this in your hands. Pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.